Prices are down 25%, sales are down 50, 60%. We're seeing a lot of these headlines in the news right now when it comes to real estate, and although these statements may be factually true, they really are lacking context. Now, obviously, news companies are going to grab the craziest statistics for their headlines to get clicks and viewers and readers, but it doesn't always paint a true picture of what's going on in the market. So in this video, we're going to break down the microeconomics of Burlington and Hamilton so that you can understand what's actually been happening in the market for the last year or so, and really understand where these numbers are coming from that the news is throwing out there with headlines. So we're going to look at a couple of pieces of data here, and the first is pricing for Burlington and Hamilton for the last 2 years. So you can see here, this is from RAB, which is the Real Estate Association of Hamilton and Burlington. The red line here is Burlington and the blue line is Hamilton. So these first 2 points is 2021. So from January 2021 to the end of the year, you can see that we had pretty stable growth throughout the entire year. Prices going from about 920 in Burlington to 1140 and 700,000 to about 880 in Hamilton. And the reason we look at this is so that we can put into context what's been happening in 2022, because there's a lot of panic with prices falling. But if you look back just 2 years, we're still up from where we came from. And we know that COVID was a bit of a crazy time for prices. Now, looking specifically at the last year, you can see from December to February, the first 2 months of the year, we had about a 10% increase in prices, which is just crazy. Things came out of the gate really hot. And then in February, this is when the Bank of Canada started to increase interest rates. And they did it so 7 times throughout the year, bringing us down to December. And what happens is when the bank starts to increase interest rates, buyer power starts to come down. So even when prices fall, it's more expensive for someone to carry the same home, even if they're purchasing it at a lower price. So obviously we are going to see prices start to fall as buyer affordability starts to decrease. So coming back to the news headlines, a lot of the statistics we're seeing is comparing February, which was the peak of pricing, to December, or the current market right now. And that's where you're going to see things like prices falling 25%. So again, these are also statistics from the Real Estate Association of Hamilton Burlington. This first chart here is looking at February 2022 compared to December 2022. And we have Burlington and Hamilton. So there's a couple things to consider as we are going through these numbers, because these are just freeze frames in time. We're looking at a month in February compared to a month in December. The first thing to consider is interest rates. We've had 7 interest rates between February and December, so rates are much higher in the December market than they were in February. The second thing is real estate market is cyclical. So typically we have a spike in the spring. So moving into February, March, April. Last year it came a little earlier in January, February. And then another one kind of end of summer, August, September. And then things start to die off pretty dramatically as we get into December. So again, when we're looking at February to December, very different interest rates, very different time of year for the market. But let's have a quick look. So you can see in Burlington, we had 106 sales in December 2022. That's down 60% from February of the same year. So just a couple months earlier. Hamilton shows similar numbers from 775 down to about 290. Again, 62% down. And similar numbers when we look at new listings. So in December, we had about 120 new listings, down from 350 in February. So that's down 67%. And similar numbers in Hamilton from about 1,050 to 350. So that's a big drop there. Again, about 66% decrease in new listings, 60% decrease in sales. And the reason I wanted to show you these numbers from these 2 months is this is where a lot of the headlines are coming from right now. Things like sales are down 60%, inventory's down 67%, but you have to put it all into context and understand that these are different months at different times with different interest rates. Now, the other thing to look at when we look at supply, which is new listings, and demand, which is the sales, is months of supply or months of inventory. And this is a really interesting number. It tells us if we're in a seller's market, a balanced market, or a buyer's market. And you can see in February, we had 0.5 months of inventory, which is extremely low, close to the all-time lows. And in December, we had 2.4 in Burlington and 3.3 in Hamilton. And you can see the rate of the percentage increases, which is just, large amounts. Basically what this number means is in February, 0.5 months means if we had no new listings hit the market, we would have 0.5 months of inventory left. So all the houses would sell in 2 weeks, basically. As we get towards the 3 months of inventory, that's when we start to see a more of a balanced market, and it's going to reflect in things like price and the average days on market. So next, we'll take a quick look at price here. We have benchmark price as well as average price. So the important thing to note is with average price, it doesn't take into consideration property types or anything, where benchmark price does. So if we have 1 month where we have a lot more detached homes selling than condos, the next month is vice versa. Average price can be skewed a little bit, even though the trend line is moving in a certain way. And benchmark takes that into consideration. So we like to look at benchmark price. The numbers are going to be very similar that you see here. So in February, our benchmark price in Burlington was about 1.3, about $1 million in Hamilton. That went down 25% from February to December, down to about 750 in Hamilton and about 970 in Burlington. And again, this is where you're seeing those headlines from. We're taking a snapshot of February to December. Average price, very similar numbers here. And then obviously, when the market changes like this, we're going to see the days on market, so the time to sell a house, increase. So before it was about a week, and now we're sitting at about 34 days. So we just had a look at February compared to December of last year, which is the peak to where we are now. Now we're going to have a quick look at December 2021 to December of this year. Because they are the similar months where the cycle of real estate is, it'll paint a little better picture of where were we a year ago. So taking a look at these numbers, you can see the numbers and the percentages are going to be a little less dramatic here. So we had 106 sales this December in Burlington. That's down 20% from the previous year. In Hamilton, it was a little bit more, down 41% from about 500 to 300. New listings in Burlington were actually up. Pretty flat though when you're talking about 100 or 110 listings, but up about 8%. Hamilton was kind of the opposite. They had from 400 new listings last December to 354 this December. Again, these numbers are very similar. Actually, in December of last year, we were in even more of a seller's market with just 0.35 and 0.37 months of inventory, which is just insane. And now again at about 2.5 to 3.5% or months of inventory with astronomical increases in the months of supply. And again, when we look at benchmark price, now we're looking at December to December. So we're not talking about the peak here. And you can see that prices are actually down about 15% when you look at December compared to December. And same in Hamilton, 15% from about 880 to 750. And the reason this is important is because if you're a homeowner, whether you've owned your home 6 months, a year, 2 years, 5 years, when you see these headlines in the news saying prices are down 25%, everybody starts to panic a little bit. But you have to understand, if you bought last December, your price is only down about 15%. And if you had bought the December before, your prices are actually up right now. So that's why it's important to look at these different points of data. So here are the numbers for 2021 compared to 2022. You can see in 2021, we had 3,500 sales in Burlington, which is a pretty typical year. In 2022, we had 2,500, which is a very serious drop. It's about 27%. Similar numbers in Hamilton, from about 10,000 sales to roughly 7,000 sales. Again, 32% decrease. And a lot of this can be directly attributed to the rising interest rates. It just costs a lot more to own a home when you've had 7 rate increases in the matter of about 9 months. And that's why a lot of buyers were hesitant to jump into the market, even though we were seeing, like we saw, prices fall anywhere from 15 to 25%. Now on the other side, looking at new listings, pretty stable in Hamilton, about 3% increase, so we call that pretty flat. In Burlington, we had about a 10% increase from 4,000 to 4,500. And then months of inventory. This is, again, important because it tells us what type of market we're in. These numbers are interesting because if you look at 2022 as a whole, we have about 1.6 or 2 months of inventory compared to when we were looking at just this last December, when those numbers are closer to 3 and 3.5. And that's because it's averaging the whole year. So the start of the year had a really good start. And then from there, we moved into more of a balanced market. And then finally, this shows a totally different story is when we look at benchmark price and average price. So taking 2021 as a whole compared to 2022 as a whole, prices were up roughly 10%. So again, this is why it's important to understand these numbers. in context and what you're actually talking about or looking at here, because if you purchased in 2021, it's likely that your home is actually worth more, even though the news headlines may make it seem like it's not. So that's it for this video. I know this was a bit of a deeper dive into the numbers for the Burlington and Hamilton area, but I think it's good to review this kind of stuff every quarter, if not at the end of every year, to really understand what happened this past year, what did it look like compared to a previous year, and really get a better understanding of what these numbers look like. If you have any questions or you'd like to receive some of this data yourself so you can have a look through it, please let us know in the comments below. Have a great day, and we'll talk to you soon.